So before you go to the closing table, you need to know how much you need to bring to the closing table. So your closing disclosure, which should be reviewed with your loan officers 3 days before the closing table, before the closing day, and make sure that you understand all these sections. So on your closing disclosure, section A is going to be origination charges. So origination charges, are you paying any points? In this file, this person was paying 0.05%, and that cost them $2,900, 2960 to bring down the rate. Where it says origination charges to the broker, if it's we're looking under borrowers paid. So if you don't see you have to pay that, that means the lenders are paying the broker fees. Next, your underwriting fees, which is $1,195. That should be the same what you received on your loan estimate. This section has zero tolerance level, meaning when your loan officer reviewed your loan estimate, gave you a loan estimate when you applied for this application, these numbers cannot change. Section B is your services that you did not shop for. This could be your appraisal fees, which was $500 in this section, your credit check, your credit report, your electronic registration MER fees, right? Flood certification, your tax service fee. So collectively, these are the section that you did not shop for. Your lender is the one who's doing this for you. Okay. Next section you have is the services that you did shop for. So your title company, right? That is hired by your attorney, which is buyer's attorney. And that title company might have fees a little bit higher or a little bit lower compared to others. So you want to ask um, your attorney and make sure they choose a solid title company for you. So the title search, how much that's going to be, their endorsement fees, the lender's attorney fees, recording fees, all these are your title services charges. In this case, in section C, it's $3,700 or 3785. So this one can change up to 10%. It can increase up to 10%. So section A, B, and C, when you add them up, you get your section D, which is your borrowers paid. So far we have $8,600 that the buyer has to bring up. There's there's more. So section E is your taxes. These are your recording fees to your county that you're purchasing the property. So for example, if you're in Queens County versus Long Island, there's going to be different rates for that. Okay. Your transfer tax. You see the transfer tax as blank there. Usually transfer tax are paid by the seller. So if the buyers are paying for it, you need to make sure that it is in the contract that you're paying for it. Otherwise, it should be for the seller. Section F is your prepaids. This one has no tolerance level, meaning it can go up as much as you guys want, but you should be shopping around for these things anyways. Okay. Section G is also your escrow account. Escrow account is that your lender is setting up a savings account, more like of a savings account where they're holding funds for you to pay two things. One is your mortgage, your home insurance policies and your property taxes. Okay, your home insurance policy every year that is going to be renewing is going to come out of your escrow account if it's set up, and your property taxes. Okay. Then we have your section H is for, the real estate agent's fees. Who usually pays with the new laws? It could be the buyer, it could be the seller, it could be both, right? So just see if you have to pay any of this. In this section, both of them are blank for you for borrower pay. That means the sellers are paying for that. Title, you have your title insurance, and there's a title's owner's policy, which is $2,600. It says optional. We always say that you should have this so nobody knocks on your door and say, this is my house. Okay. Then you add all of them up, and then in your eye, you will see so far we have $19,000 in fees total. Okay. Then we have, you want to compare on one of the next page your loan estimate and your final CD that you received. If you have the original loan estimate, you should see the same numbers here. So you want to see, hey, if the prices went up, right? The closing cost initially on the loan estimate was $22,000 and now it was $28,000. You need to look at all sections, okay? And you need to review this with your loan officers at least 3 days before the closing so you know what you're doing. So in this case, the purchase price was $690,000. The closing costs were $28,000. So collectively, you can see that the rate was around 4.14% of the closing cost. Typically, whatever the sale price is, your closing costs are between 3 to 5%. If it's more, you should question it. If it's less, you should find out where your savings are. Otherwise, if you have any questions, please reach out to us. I hope this helps. Take care.